Are we about to get a major global financial crisis where the US stock markets and stock markets around the world are ready to tumble 30, 40, 50% over the next couple of months? And of course, if that happens, it is likely that Bitcoin and cryptocurrency is going to do similar drawdowns or maybe even more, as it tends to move more than the stock market. So in this video, I want to show you a couple of very important charts where we're looking at the stock markets, where we're comparing today's price action to 2008 and how we are literally at the cusp of potentially repeating the 2008 financial crisis, and we're going to look at whether or not that is likely or possible to even happen. So if you are new to the channel, welcome. Please click that subscribe button down below, click the notification bell, that way you get notified of future updates. And if you want to get on my email list so I can just send you an email whenever I upload a video or have an important update to share with you, click the first link in the description down below. Just click that, enter your name and email, and that way I can just send you an email whenever I have something important to share, including whenever I upload a new video. You can also follow on Instagram and Twitter. The links are in the description down below. So what we have in front of us right now is the log chart of the S&P 500. It is a weekly chart going back all the way to 2006, even a little bit before that. We have the 50-week simple moving average in blue. We have the 200-week simple moving average in red, which is basically the average of those two periods, 250, and it takes the average, it smooths out the price action. So what I want to show you here, very simple, you can see this for yourself, is the comparison of the price action leading up to the 2008 financial crisis and what we've been seeing over the last year or so that has been leading up to it. And it has actually been very, very similar. So what you can see right here is as soon as we broke the 50-week moving average in 2007, we dropped to the 200, then we ended up bouncing. We got rejected by the 50. We couldn't get back above it, dropped back below the 200, and then we had a 50% sell-off under that 200-week moving average. You can see over here 50%, and you can see how quickly that went. Actually, that happened in a period of 34 bars, so just a little bit over a 6-month period where we dropped that 50%. So it happens very quickly and it drops very fast. And then of course after that we had, the longest bull market in history, where from 2009 to basically 2021 we went up only. So the bad news is, if it does drop like that, obviously it goes down very deep, and if you are overextended or you are on margin or you are trading with leverage and you need that money or you're overextended, you can get in a very serious financial difficulty. You can get liquidated, you can get margin called, etc. But if you are prepared for this and you have cash available and you are well positioned and you are ready for that drop, if it happens and you are able to deploy your risk capital towards those lows after that major sell-off, look at what happened after that. And it literally becomes the best financial opportunity in the markets that is available, that happens every several years or maybe even every decade or every 2 decades, that you get a chance to buy the lows like that. So let's see where we are right now. We dropped below the 50, we went to almost the 200, we bounced and got rejected. In the same way, we bounced and got rejected by the 50-week moving average. So that is very, very similar, and that is a big warning sign because we got rejected here, which means the bears are in control at this point, and now we are sitting right on that 200-week moving average once again. So we are literally at the cusp of this point right here before we got that major 50% sell-off. Does that mean it's going to happen? No, it's not a guaranteed thing, as you know with anything in financial markets. But the charts tend to show the way. I've seen this for years and years and years, over and over and over again. Charts indicate the direction of future moves, and if you understand how to read the charts and you look at what the charts are telling us, what the signals they are giving, then the probabilities favor certain moves, and you can use that technical analysis or that knowledge about understanding these charts to be able to make predictions or probabilities, guesses, whatever you want to call them. But it's not just a guess of randomly flipping a coin. You're actually basing this on what the charts are telling us, the movements, and what tends to happen when certain things start to appear on the chart. Like when we break the 50, we tend to go to the 200. When we get rejected again by the 50, we are bearish. We're making lower highs and lower lows. In a similar way, we are making lower lows, lower highs, all this way down. We got rejected by the 50, we're on the 200. Now, we really need to bounce here. We need to get back above this 200 as quickly as possible, because if we start closing below it for the next multiple weeks, the downside risk becomes incredibly big. In the same way here, okay, we got here below it a little bit. That was a bit of a fake out. But here, we didn't get below it and we bounced. Here, we touched it, we bounced. Here, we went below it. This is actually a 17% drop, even though it looks pretty small on the chart. So we get a 17% drop. That would still be pretty significant for financial markets and for Bitcoin and for crypto. Okay, so if we get below this, if we don't bounce right now, you know, there's anywhere between 10, 20, 30, 40, 50% possibility of sell-off. And then if you combine that with the overall macro environment, what's happening in the world with the economy, with the Fed and the central banks that have been raising interest rates to combat inflation, that inflation is still incredibly high. The Fed is still saying we're going to keep this hawkish stance, and we are maybe even going to increase the interest rates further this year still. So that is putting a lot of pressure on these markets. There's of course a lot more debt, there's a lot more derivatives compared to 2008 in the markets, with a lot of funds that are betting on this recovering, that are buying in. What happens when we continue to drop? Do we get a lot of margin calls? Do we get a lot of liquidations that accelerate and kind of create that free fall, that create a massive 30, 40, 50% drop over the next 6, 7, 8 months? We are on the cusp of that. So that is why I'm making this video, to prepare you for this possibility. Again, it is not a guaranteed thing, but any investment you have right now or any investment you're planning to make, you should factor in the possibility that what if this does repeat? Are you prepared to be able to withstand a 30, 40, 50% drawdown? Right? Is that going to hurt you financially, or is that part of your strategy where you're dollar cost averaging, you're only putting small amounts of your risk capital in, and you can continue to add as it drops, and you're willing to hold it for the next 5, 10, 15, 20 years, and it doesn't matter to you. Okay, the strategy matters, but you know, if you're trying to buy and you're overextending yourself and you're using leverage and it drops 30 or 40, 50%, there's a good chance you're going to get liquidated and lose a lot, or maybe even all of your money. So be very, very careful. I'm obviously not a financial advisor. I'm just sharing this with you to point out these possibilities. And the charts are very much showing that we are close to a possibility of this happening if we start to close below this 200-week moving average. Now, real quick, I'll show you the Dow Jones Industrial Average too, because it's also an important chart to watch that a lot of people are watching for the direction of the overall stock market. The S&P 500, the Dow Jones Industrial Average. You can also look at the NASDAQ and the Russell. Maybe we'll do that in a second. But similar thing, weekly log chart, 50 moving average in blue, 200 moving average in red. And you can see if we go below the 200, there is that risk of 2008. We bounced off it here, things were good. We bounced off it twice over here, we continued the bull market. Here it didn't even touch it, it bounced. 2020. We drop below it, and you can see over here that drop, even though it looks small on the chart, you can see that was a 23% drop. So we are actually sitting right on this 200-week moving average on the Dow Jones Industrial Average, and you can see it did pop below it a little bit. We're sitting right on it right now. So ideally, we need to bounce here, and this needs to hold for us to continue to the upside. And even then, any sort of little bounce right now could still be a squeeze or a bear market rally. We need to really reclaim this 50 moving average to get into a more longer term bullish trend. For now, that risk to the downside is there. So keep an eye on these 200-week moving averages on the Dow Jones, on the S&P 500, because if those break and we sell off over here, then it's very likely that Bitcoin is going to follow that sell-off, which means that Ethereum and the other altcoins are going to follow that sell-off, and we could drop 20, 30, 40, 50% over the next, 6 to 8 months. That is a possibility. So it is very, very important, in my opinion, that we do bounce, that we hold this 200-week moving average, and that we do not start getting weekly closes below it, because that would really increase the risk of a repeat of a 2008 style global financial crisis and sell-off. So I would love to know, actually, what do you think as you're watching this? Have you seen me explain this on the charts? What do you think is going to happen? Do you think we're going to get that major sell-off, or is this the bottom? Is the Fed going to pivot? Is something going to happen? Are we going to bounce, and are we going to continue the bull market? Please leave a comment down below. Let me know what you think. And if you enjoyed this video, please smash the like button, subscribe to the channel, Share this with your friends and family, put it on social media, on Twitter, on Facebook, on Instagram, wherever you want to share it, because the more people that see this, obviously the more people can be prepared and make better investment decisions and hopefully be able to make more profits or avoid more losses.